Texas. In the years following the pandemic, home prices here skyrocketed. The typical single-family home in the state went from $206,000 in January of 2019 to $300,000 as of the latest reading in December of 2024. In just about 3 short years, prices had jumped 50%, fueled by low rates, migration from high-cost states, and a red-hot market. But Texas is now on the front pages for a different reason, with experts calling it one of the biggest bubbles in real estate history. And according to some, it's already starting to pop. Since about August of 2022, home prices here have actually fell. According to the Zillow Home Index, after peaking in August of 22, the typical single-family home had lost 2.26% of its value. Now, this may seem like nothing considering all the gains we had back here, but if you start digging into the data, something special is happening in this particular state that is causing a lot of fear among agents and sellers. Some are pointing to strong evidence that this decline is the start of a major cliff. Why? Well, first off, there is a massive supply issue. Without digging too deep into this subject, this map shows the year-over-year percentage change in active housing inventory based on Realtor.com data. It covers all counties and areas that Realtor.com tracks, with extremely rural regions left blank due to a lack of data. Now, by filtering for areas where active inventory has increased more than 20% in the past year, we can easily spot regions experiencing a significant rise in supply, meaning at least 20% more homes are on the market compared to last year. And as you can see, the two standout areas with the largest inventory surges are Dallas and Houston, with other semi-rural areas experiencing even bigger increases. Out of the 4 major Texas cities, Houston, Austin, San Antonio, and Dallas, 3 currently have active inventory counts higher than their pre-pandemic averages. Houston is the exception, just barely below this threshold, but it's likely to surpass it by this summer. And inventory is really the first part of the recipe that you need for home price cuts. Without an excess of homes, the market dynamics are unlikely to shift, even with record high prices and interest rates. So now when you go back to that tiny price decline I was talking about earlier, this situation looks a whole lot worse than what the price chart was showing. Even sophisticated data-driven experts are now acknowledging that there are simply more sellers than buyers. This trend holds true across much of the nation, with inventory building at the fastest pace in the southern states. Listen to Altos Research break this down in detail in this quick clip.
So on the supply side, there were 51,000 new listings unsold this week. That's 13% more than last year at this time. Including the immediate sales, those that are already sold. There were 4% more sellers now than a year ago. So this continues the expected pattern for the year, which is more sellers each week than a year ago. The growing supply pattern is healthy if we also get more buyers. But right now, with the cost of money so high, it's not showing any signs of decline on the mortgage rates. Buyers are still very obviously waiting. So inventory is building across the country. So in this chart, each line is a year with the weekly count of the unsold new listings. At the left end of the chart, you can see the sellers in 2025 are looking much more like the old days. The gray lines here are previous years. The bright blue line is last year's curve. In 2024, there were more sellers each week than 2023. 25 continues that trend with more than 24. So now we've been out of the crazy pandemic market longer than we were in it, and we are finally returning to more normal levels of sellers and unsold inventory.
While Altos noted that this trend holds true for most of the nation, it's especially pronounced in Texas. I've created a chart that plots normalized inventory levels across the 4 largest cities in Texas compared to the US as a whole. You don't need to get into the detailed mechanics here. The key takeaway is clear. During the pandemic, it became painfully obvious why real estate prices were skyrocketing, particularly in places like Austin. Nationally, inventory levels dropped dramatically and still haven't recovered to their January 2018 levels. In fact, there are about 20% fewer homes in the market today compared to that time. This suggests that the problem is far from being resolved. However, when we shift our focus to Texas, the picture changes dramatically. In every major city, there are now significantly more homes for sale compared to January 2018, a stark contrast to the national trend. Take Houston and San Antonio, for example. Both cities have around 50% more homes on the market than pre-pandemic levels and roughly 200% more than the pandemic lows. But all of this has yet to translate to lower prices. So the big question is when? When will prices fall to reflect this changing inventory story that's clearly pointing to a potential crash? Well, the unfortunate truth for buyers is that for home prices to decline significantly in the way that they would want them to, you really need unemployment to go up sharply, which is essentially another way to say that we need a recession for that to happen. Without a major economic downturn, prices will likely do what they have done in other bubble cities like Austin. Here you can see prices went up crazy, and then following the inventory surge situation that we hinted at earlier, prices started a slow, painful decline since May of 2022. Back then, the average listing was around 629,000. Today that number is 494, which is about 20% less, but to many this still doesn't feel like a crash because it's played out like a slow-moving train wreck. For prices to fall dramatically like they did in 08, you need an 08-like situation in the markets and the economy in general, and this is where the problem lies. The US has experienced one of the greatest bull runs in the history of capitalism. Many argue that since the early 80s, we've really only felt the impact of two major recessions, the dot-com bubble and the 08 financial crises. Outside of those events, the country has been on an unprecedented economic winning streak. According to PhD economist and YouTuber Sven Carlin, the US has been on a bull run for over 40 years. Take a listen to what he thinks this all means.
This is a stock market bubble, and a 42-year-old one. I don't think that people realize that the stock market, the S&P 500, is up 43% over the last year. Can you imagine the stock market going up 43% in just a year? 90% over the past 5 years. That's something mind-blowing, but considered normal these days. I'm going to give you something even more mind-blowing. I went to the data specialist Yardeni Research and just look at the S&P 500 bull markets since 1928. The percentage gains there: 70, 46, 100, 120, 37, 90, 38, 60, 20, 20, 60, 70, 20. Okay, 1, 267, 80, 70. These were the bull markets, and then you had also the bear markets in between. However, look at the last 40 years. 200, 500, 100, 400, and then again 114. And this all means that we are in a bull market since 1980. If I look at the historical stock market, let's take out the inflation adjusted, and you can see here the log scale. So 1982, the stock market was around 107, and since then it just went up. This is almost 60 times, including dividends. That's more than 60 times in 42 years on two staggering bull runs. First, the big run, the 1980s, 1990s, till the dot-com bubble, a small deflation, great financial crisis, more money printing, more debt, and we are now at almost a 10x from the bottom in the 2009 period. This is the greatest bull market in history and a 44-year-old bull market without the normality of the stock market that was in the past.
Essentially, to expect a major housing crash, we need another major crash in the economy. But with the housing situation in Texas so weak, it wouldn't surprise me to see the same behavior we've seen in Austin over the last 3 years. From the data, it seems that the peak has been reached, and now we're mostly flat or slightly declining in most areas. We can expect further weakness this year, but a major crash is out of the question without the economy falling over. Cities like Houston and Dallas are going to get falling prices, but having prices go back to their pre-pandemic peaks is simply impossible without a major economic downturn, one that we have not seen for over 17 years. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and don't forget to leave a comment on what you think will happen to Texas real estate.